Good day, dear students. In today's presentation, we are going to see goods and service tax. And this goods and service tax, it was introduced from April 1, 2020. This goods and service tax, it is a value added tax and it is levied on manufacture, sale and consumption of goods and services. And this goods and service tax, it was introduced in order to eliminate all the limitations which were found in the other indirect taxes. Now we are passing on to the features of GST. So this GST, it is applicable on all supplies of goods and services. Okay, so it is applicable on the supply of goods and services, and this is destination based. So the final user or the final consumer who buys the product finally will be taxable under this goods and service tax. And this goods and service tax, it is a dual tax because it is payable both to, that is the taxpayer has to pay both to the central as well as the state government. And you have in case if a person wants to make any interstate supply, he has to make this integrated goods and service tax. So he has to make this payment, and in case if a person wants to import goods, he has to pay both this integrated goods and service tax as well as customs duty. So you have two taxes for imports. And in case of goods and services, all are taxable except alcohol, which is for human consumption. And you have certain items called as zero rated goods, and those goods are not taxable under GST. So a taxpayer, he can make all his filings electronically, and here under this goods and service tax, the assessee, he can just make assessment for himself. So you have a number of tax rates under GST. It may be either 0% or 3% or 5% or 12% or 18% or even 28%. So this goods and service tax, it is protecting the consumers from fraudulent sellers. Some fraudulent sellers, they may be trying to take more profit. So in order to take more profit, they will be charging more on the buyers. So this goods and service tax is avoiding such acts. And when an invoice is generated, a separate entry is made for GST in each and every invoice, so the buyer can know the GST which is paid by him. So you have some advantages. The first advantage is that you are having common tax in the tax rates in common market. And here that is this goods and service tax, it is boosting Make in India initiative, because in case if you import and sell the goods, you are liable to pay two taxes. One is integrated goods and service tax and the other one is customs duty. But in case of making and selling in India, you have only one tax. So this is encouraging Make in India. And next what they're telling us, when you want to export goods from India, it is zero rated, so you don't have any tax for export, and it is eradicating commission, and you need not make any manual interface. Taxpayers, they can just easily enter the amount and they can generate the tax. It is highly automated, and uniform rate is applicable throughout the country. So it is also helping in the economic growth. And you can get that is when a taxpayer is trying to enter all the details, it is very transparent, and the person is also accountable to pay all the taxes. So disadvantages of GST, it is not a single tax, and you have multiple rates for paying. In case if you are registering in that is if you are making sales in different states, you have to register separately, and professionals are needed for registering this, that is for calculating all these taxes. You need computer for calculating GST. So it is increasing the operational cost of small sellers, and you are having dual control. Thank you, girls.